There's a company called Capital Economics who basically is an economic forecasting company. They put together different charts and graphs and things like that that basically try to predict what's happening in our economy. And they came up with this 4-stage outline of what a housing market crash or a housing market downturn will look like. And right now, most of the world, including the United States, is in the 3rd stage of this housing market crash. And so the stages go like this. The first stage is weakness in housing market sentiment. So obviously, over the past several months, maybe even year, there's been a ton of videos on YouTube and housing market headlines across the news talking about the housing market's going to crash and how bad it's going to be and this and that. So people are starting to wonder about this and start thinking about, is this really going to happen, and forming their own opinions based on what's going on. And right now the overall sentiment is that things are not looking good when it comes to the housing market. The second measure is the measure of buyer traffic, and this means how many people are coming to open houses, how many mortgage applications are there, how many buyers are going under contract each month, all kinds of things like this. And we know that all of those things are now down as well. So that's already the first 2 stages totally crossed off the list, okay? And the 3rd stage is the stage that we're in right now, which is measures of the housing market activity starting to drop. So obviously, those are some of the things we already kind of talked about. It doesn't really say which of those things, like mortgage applications or pending home sales or closed home sales, go under each one of these categories, but you can kind of lump 2 and 3 together. So it says we're in this 3rd stage now, and the very last stage is house prices themselves fall. Well, depending on where you live, we're already seeing that too. So you could arguably say that the housing market crash is already here. Now, obviously, guys, the word crash gets the clicks on YouTube, and I put that in my title because that's what people respond to. If you've seen some of my videos in the past, then you probably know that I would probably say that a housing market crash is probably going to be a significant downturn, like something that's on the order of 20% drops in prices or more. I would consider that a crash. If it's not 20%, then I would say it's more of a correction. And this is all just down to terminology. You can call it whatever you want, but just realize that the word crash sounds really severe. But I would even argue in today's environment, even if housing prices did go down by 20%, then, they're still way above what they were a couple years ago. So yeah, it is a crash in prices, but it's still very expensive then to buy a house. But this article goes on to say that the biggest price corrections or the biggest real estate market crashes are not going to be in the US. They're going to be in places like Canada and New Zealand, Australia, Sweden, and the UK are expected to see bigger declines in home values than the US. And about a week ago, I made a video about a different article that predicted a similar price cut in the US. And according to this Capital Economics, they say that the price cuts in the US are only going to come down to about 5%. And I think that's kind of a ridiculous prediction. I just don't see how these guys are saying it's only going to be, 5%. Okay? That's really not that much. And it's not going to do much to help people when it comes to affordability either, especially with these rising interest rates. Got another new house being built right over here, right on the canal. It's a waterfront house. It's a pretty big house. Very tall ceilings in there. Now, another sign that we have big trouble in the housing market is just how many homes are being purchased by institutional investors. And Congress had a meeting at the end of June to kind of discuss this and figure out what's going on out there and try to put some figures together on what's happening. So the statistics from this are pretty alarming when you look at it. And basically, guys, if we go back to 2011, there wasn't a single company or hedge fund or anything like that in the United States that owned more than 1,000 homes, okay? So institutional investment in real estate back in those days was very low, especially compared to today. But then, if we fast forward to today, the most recent figures that they have here in this article. And as of October 2021, the 5 largest institutional investors owned a combined total of 280,637 single-family homes. And the crazy thing about this is that pretty much all of these homes that these people own are all homes that could have been bought by first-time home buyers because they're what's considered starter homes. You know, we're talking smaller houses, 1,500 to 2,000 square feet, and probably 250K or less in a lot of cases. And we already know that these are the type of properties that these people are buying. And some of the biggest names that have purchased some of these homes are companies like Invitation Homes, Progress Residential, American Homes for Rent, First Key Homes, and Amherst Residential. Those are like the top 5 biggest players when it comes to investing in real estate right now. And one of the biggest concerns that was discussed during this meeting is that as home prices get more expensive, the concern is that home builders will turn to institutional investors to buy up all their inventory, like we see in a lot of these big bulk acquisitions. Basically, you know, they'll go to, a home builder will go to a big institutional investor and say, hey, you know, we have 200 homes and we'll give it to you at a slight discount if you buy them all. So there's that. So the good thing is this is on Congress's radar. The bad thing is, what are they actually going to do about it? Because if you're like me, you probably don't have a whole lot of faith in our government right now with the way things are going, because they're basically the reason we're in this mess right now to begin with. And trusting these guys to fix it, you know, could just make things worse. So I don't know. Let me know what you guys think, if this is a good thing that they're aware of this now and they're kind of looking at institutional investment as a problem. I don't know. Give me your opinion. And while we're on the subject of real estate, guys, this is a great cautionary tale for everybody out there watching to pay attention to. There was this crazy story out of San Francisco. I have everything linked down in the description below, guys. So all these things I'm talking about, by the way, they're in the description below if you want to go check out these stories for yourself. But there was this couple that owns a home in San Francisco who got fined $1,500 for parking in their own driveway. Yeah, you heard me right. $1,500. That'd be like me parking over there. This is my house, and I get fined $1,500. Let's think about this for a second. You can take a dump on the sidewalk in San Francisco and not get arrested. That's legal. You can run naked in the streets of San Francisco. That's legal as well. You can shoot heroin into your arm in the middle of the street in San Francisco. And all these things aren't even considered a crime. Oh, and the latest thing is also you can also walk into Walgreens and steal up to $1,000 of merchandise and just walk out. So there's that. You can do all of these things in San Francisco, but you can't park in your own driveway. Now, I'm sure this is going to cause a big outrage once more people hear about this. But the cautionary tale here, guys, is that you need to be aware of these things when you're purchasing real estate, okay? Just knowing that something like this is going on over there just shows how upside down everything is in San Francisco right now. And I wouldn't take one of those houses if they gave it to me for free. And all I had to do was pay the property taxes. And I personally love the Bay Area. The way San Francisco is going, I mean, they're destroying this beautiful city, guys, because let's face it, it is one of the nation's most beautiful cities. If you've ever been there, you can attest to that. The views are stunning, the walkability, the restaurants, there's a lot of great things about it. I mean, but these guys seem to be doing everything they can to just drive people out. And this is the latest psychotic episode coming out of the local San Francisco code enforcement. So you can actually do all these other crazy things that in most cities across the United States would get you arrested on the spot. You can't park in your own driveway. So just remember this story when you're looking at real estate in different areas, and make sure you know about these type of things before choosing a place to live, because you just never know what kind of crazy rules or laws might exist somewhere, and it's worth doing a little bit of research and digging on those things before pulling the trigger on a home somewhere. Oh, and one more thing to add to that is that the reason why these people actually got caught, because they've been parking in that spot for like 36 years in their driveway, is one of the neighbors complained about it. So the neighbors literally complained about somebody parking in their own driveway and now they're not allowed to anymore without getting fined. Those are your neighbors in San Francisco. Check it out. We got a brand new house here for sale. Actually, I don't know if it's brand new or remodeled, but looks like they're still doing some work on it here. Of course, I'll throw up the listing. You guys can see what's going on here. Now, the Big Short investor, Michael Burry, recently pointed something out that I didn't even know, but it's good to know these things, guys. And he pointed out that the Fed is not actually doing the amount of quantitative tightening that they promise. So what he pointed out is that the Fed was supposed to sell $30 billion worth of treasuries and $17.5 billion worth of mortgage-backed securities per month starting June 1st, okay? But during June, the mortgage-backed security holdings rose almost $3 billion and the treasury holdings fell less than $10 billion. So not only did they add to their balance sheet when it came to the mortgage-backed securities, but they definitely did not reduce their treasury holdings nearly as much as they said they were going to. Now, the reason why this gets me a little bit concerned is because this is a sign right here that the Fed is still propping up the housing market, okay? This could be part of the reason why we haven't seen home prices fall as drastically as they possibly could yet, because they're still buying mortgage-backed securities even after they said they weren't going to be doing that anymore. So mortgage rates are up, guys, and that's already making the demand to get a new mortgage go down. But if they actually do what they say they're going to do and stop buying these mortgage-backed securities, then that's really going to tighten up lending out there, because it's going to be, most of the risk is going to be now on the bank itself or the lender who's giving you the loan, because they can't rely on the government to turn around and purchase that mortgage from them. So you can bet that mortgage lending is going to tighten up significantly, or the credit standards or whatever type of criteria they're going to require for you to buy a home is literally going to change a lot once they actually stop buying these mortgage-backed securities. So this is one way that the government right now is kicking the can down the road when it comes to the housing market crash, okay? So there's another thing to be aware of that's happening out there. You know, they say they're going to do one thing, but they're actually doing another thing. And that's what worries me right now, because just raising the interest rates to fight inflation is only going to fix part of the problem. But they truly need to stop doing all of these shenanigans that are causing home prices to continue to rise even in this environment in some cases. Check this out. This place is for rent. Though this place looks like it's been hurting. Needs a lot of work here. Not sure how much they're renting this for, but if I got to take a stab at it, I'd be guessing at least 12 grand a month. Now, according to the Atlanta Fed, we're already in a recession, guys. Now, I know a lot of you also think that by reading your comments. I know that we're kind of all on the same page about this, but it's not going to be officially announced until we actually see the real numbers come out at the end of July here for the most recent GDP announcement. But according to them, we're on track to lose another 2.1% of GDP in July here, and that would officially put the US in a recession, since we'll have 2 quarters of negative GDP growth. And it's not just us, guys. There's other countries across the world that are facing these same issues right now. So this is not a United States problem, this is a global problem. And going back to the beginning of this video regarding the housing crash, it's not just the United States either, guys. We're all in this together. So if you're watching this from another country, you can probably guarantee that your country is having similar troubles right now that we're having here in the US. But the crazy thing is that pretty much none of these officials want to admit that we are in a recession for some reason. I think they're all just trying to either pretend like it's not happening, or they think that the economy actually is too strong for us to really be in a recession. I don't know what it is. It could be denial, it could be a lot of things, it could just be flat out lies. But we know what's really going on because we pay attention to stuff like this. And the numbers don't lie, guys. The numbers say that we're in a recession. Now that we pretty much know it's gonna be official, even before they call it, it's just like watching a baseball game or a football game on TV and you know that the other team is losing, but it hasn't been called yet, you know? But you know they're gonna lose. So that's where we're at right now. But it's good that we know this sort of ahead of time, because if you watch my channel and other channels out there that talk about these type of things, you can kind of stay ahead of the curve on what's happening in the housing market and with the economy in general. And that might give you an edge when it comes to investing or having an idea of what to do with your money in inflationary times, or when might be the best time to, invest in real estate, anything like that. So I'm never telling anybody exactly what to do on this channel, of course not, but I think by just hearing these things and paying attention, that will give you an edge over a lot of people that choose to bury their head in the sand. But hey guys, if any of you out there like Subway, on July 12th, they're gonna be giving away free 6-inch sandwiches at all their stores across the country. And all you need to do is walk in there and order one of their new sandwiches that apparently they've developed for this promotion. And from 10 a.m. to 12 p.m. on July 12th, you can go in the Subway and get that free sandwich. So I think this is a great way to sort of predict a recession, right? When you see companies like this that are actively going out there and trying to put promotions into place to get people through the doors like this is a sign that times are changing. And the more we recognize these things and notice them, then the more we can stay ahead of the curve, so to speak. Got another brand new build over here. This place is a lot bigger than the other one I showed you guys over there, the very first one. This house looks to be like twice the size of that house, also on the water. This one's on the open bay though, so it's definitely more expensive. But I think one of the main things that everybody needs to be looking at right now is how can I make a little extra money? How can I save a little extra money, that I'm not spending every month? How can I reduce costs on certain things I don't need? And how can I get out of debt if you have any? So all those things are gonna help you tremendously as the recession settles in here, because as the year goes on, it's gonna be tougher and tougher to get a good job, and until inflation gets under control, the cost of things could continue to go up. So that's going to be an issue we have to look at. So the best thing you can do right now is to just have a little extra money to be able to spend on things, rather than maxing yourself out each month and not be able to pay your bills, guys. If there's any time to get ahead, is during the recession. I'm not spending money on things I don't need right now. I'm basically just paying for what I need to, and really not much else. I'm not even going on vacation this year. I'm just staying put here in Miami, even though I don't like summers here. I just would prefer to be out of here during the summertime. But now that things are getting more expensive and there's a lot of uncertainty, I'd rather just hang tight here for the rest of the year and save my money and see what happens. Check out the iguana. Can you guys see him? Running away over there. If you guys enjoyed this video, please subscribe to the channel and check out my next video on the screen right over here, and I'll catch you over in the next one.